get into a discussion here on earnings. Tesla reports after the close. We've already had delivery numbers for Q2. They're a little bit better than expected, still weaker than year-ago periods. Let's bring in Diane King Hall, senior markets correspondent here. Diane, give us a breakdown on Tesla, because a 25% run-up in July, it's setting the bar pretty high for this earnings result today.
It's true, especially when you think about kind of where the year started for Tesla in the early part of this year to where it is now. So here's what the expectations are. Adjusted EPS is expected to be 62 cents a share. Last quarter, that number was 45 cents a share. Year ago, that number was 91 cents a share. The expectation for revenue is expected to total $25.13 billion. Last quarter, that number was $21.3 billion. Last year, that number was just shy of $25 billion. So Tesla's definitely had some challenges this year when you compare it to, kind of a year-over-year basis and what demand has looked like in the EV space in general for Tesla and all EV makers in general. But Tesla had started to turn the corner in terms of, like, we saw the latest delivery numbers. Those were better than expected, but still, again, as you point out, slow when you compare it on a year-over-year basis. There are a few things that's been driving the gains that we've seen recently in Tesla's share price. That has to do with the news about the robo-taxi, although that was supposed to, we were supposed to get more details on it August 8th, but we know that date has been pushed out. The news about deliveries and also the approval of Elon Musk's pay package. So those are the things that have kind of helped the share price recently, guys.
Diane, it's an interesting thing that Tesla's got going on. You're right, the earnings are going to be lower from a year ago. The deliveries are going to be lower from a year ago. The stock just rallied 35% in a month. They delayed the robo-taxi. Now, I think there's a Google lesson there with robo-taxi. It's better to delay it and get it right than bring it out and miss. So I don't think that's a problem. But he's got to address it, right? That, and he's got to give an update on China, 20% of their revenues.
Yeah, absolutely. Investors will want to know more about the date and what we're going to see come October, because a lot of Tesla's future, especially how the analyst community is looking at it, hinges on what is the demand picture look like and what does the picture look like for AI integration and more development in the full service autonomous vehicles, right? And what does the robo-taxi look like? It does make sense to delay it, because when you think about I'm trying to think back if it was the Cybertruck, if you remember that Elon Musk event where he hit a window and it actually smashed, and it was kind of like, so that wasn't good. And, so mixed messages in terms of how analysts are viewing Tesla right now. Wells Fargo had a recent note. This is one of my favorite ones. They said, will retail puppy love last? Because we know a lot of retail investors like Tesla. They questioned that. They pointed out the things that have been, recently kind of beneficial to it. They call it razzle-dazzle headlines, but they said they remain underweight on the Tesla story.
Yeah, a lot of different price targets out there on this one going into earnings as usual. It should be a relatively volatile earnings report. All right, thanks to Diane King Hall, senior markets correspondent here, breaking it down for us. Thank you.